Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week. Always interesting and pertinent information in the middle. Well, it's been 2 weeks since I did this show, as last week was our vacation week, our week off, and it certainly has been eventful. When I left for vacation, stocks were looking weak. They were getting sold. We had anticipated some further decline. In fact, we thought the S&P 500 would make it down to about 2,000 before turning back to the upside. Well, it turned up early on us while we were away, and now it's looking different. We'll talk about our flip-flop to a more bullish stance as we get into our short-term view of the coming week. Investors, well, they're acting like they're in an old paradigm, actually, as they see the Fed moving interest rates up and the market not getting weak. Well, what that means is that they're assuming that the Fed is raising because the economies are getting stronger. Actually, they did upgrade GDP to about 0.8% for the first quarter. That's exciting growth. And they are looking for about 2.5% in the current quarter. So this is a period of stronger growth. Economic data has been better, and that sets up the Fed for raising interest rates. So the question is the economy really stronger? Well, maybe there's a little window where it is here, but world economies are very slow. We see really nightmarish situation over in Japan and South America, and very, very slow growth in Europe. And we know that China is having a lot of trouble too. So is all of a sudden everything going to be great because, well, the Fed did all this stimulating? I really doubt it. And I think that what investors are doing are trading in this old way that they understand, that the Fed is telling us that the economy is stronger, so they're buying stocks, and they are missing the fact that the Fed actually is politically motivated, and that the FOMC is trying to get normalized in here so they can regain some credibility. In fact, Janet Yellen, I'll talk to you about that in just a moment, is talking about interest rates being stronger and little room, interest rates being higher as the economy gets stronger, and no real room to cut rates if they have to. So essentially what they're doing is just trying to regain this credibility, and they want to keep liberals in power, the liberal Keynesians that are basically the basis of what the FOMC is built on. So they're doing what they need to do to try to get rates up in here. You might get one or two upticks in rates in coming months, but I don't think you're going to get much more than that. As far as the stock market goes, well, we have a new high likely. I mean, we're not all that far from it, right? Less than 2% or so for the S&P 500, so it wouldn't be that big of a move to get up and test those highs. But afterwards, and as we get into this election time and post-election, well, we could have Hillary, and that's fine. I mean, we'll be on the same path to the big debt bomb that we're on right now, just like, well, much of the rest of the world. If we have Donald Trump, well, if the polls stay where they are, where he's just even or slightly ahead, could get some significant civil unrest, especially if he wins. Can you imagine after that what it would be like? I mean, almost a chaotic condition probably in this country, and that may happen even in the summer as we get towards the election in here. So yeah, we think that the stock market's going to test the old highs, maybe get a little bit higher than that. But after that, in 2017, we think maybe actually late 2016 and 2017, it could be a miserable environment for investors. That's actually what we think is going to happen. One more rally, finish this big rolling top that we've had here over the last year and a half, and then the markets have a much more difficult time after that. Watch for one of our big picture analysis out in coming months as we look at that. So in this last week, the dollar strength has really set a tone in here as it has affected gold, silver, platinum, as they've struggled, and we've seen the euro currency now break what was a pattern that we thought was going to bring us a bounce. That one has not been able to get any legs either. So dollar strength, we believe, is temporary also, and just in a little bouncing window in here. It hasn't really done much to our longer-term charts, and pretty expected. You can take a look at our longer-term view in there in Future Speak also last Wednesday. So we had this environment where the dollar is still stronger, precious metals down, the euro moving down. The yen moved sideways over the week. It actually broke early in the week. I'll show you that also on our chart. And they are trying to get the yen weaker. Shinzo Abe coming out at the G7 meeting and using the Lehman word. I mean, Lehman is almost a word for depression, right? I mean, he's worried about another Lehman event. And he's actually tried to get the G7 to use that in their dialogue, but they have chosen not to do that because they don't want to panic the rest of the world. Well, in Japan, since they can't stimulate the economy and the demographics turned so bad there some decades ago, they're now talking about not raising sales tax again, which would be the third time, which is maybe one of the only smart things that they've ever done. Shinzo Abe should be just fired, if you ask me, along with his head of their Bank of Japan. And then you won't have to maybe worry about a Lehman event in the coming decades because they can correct things. But in the meantime, they have a nightmare, over 500% debt to GDP, private and public. And that is, they're either going to come to the tipping point and take down our country and other countries, or maybe China's the one that does it. But that's where the problem is out there. Maybe he's right talking about the potential Lehman event. So in this environment, well, you would think that people might be a little bit worried and moving into safe havens, but that's not the case. They want to buy stocks right now, so they're selling the precious metals, and bonds, as we expect, are in some trouble. We think the next few weeks offer a possibility of some pretty sizable declines. We thought that when we left, and we did get some weakness. Just bonds this last week have moved sideways, but we think setting up for some more trouble in there. Let's take a look at our 60-minute chart of the S&P 500, and you will see what's happened in this last week. The gray area being the overnight trading, and the white area being the trading during the normal pit hours. You can see on Monday it was a quiet day, nothing really happened. U.S. stocks, they tried to pop up early in the day after this sideways action here overnight, but then reversed. The Fed heads, they're out talking really hawkishly, and gold here was down for the fourth straight day right over there. And on Tuesday comes, and the markets looked kind of weak overnight, but then the strong dollar hits the gold and silver market, and there was comments out of Japan that broke the yen. Once the yen started to drop, buying came in overnight. Then just after the opening, new home sales came out surging 17%, massive move. Median home prices jump, supplies drop. That's all good news for the housing market. We did a special segment on the home builder stocks, which we put a positive spin on. You'll probably want to watch that. And the bonds do continue to be weak at that point. On Tuesday, we had that big gain. So on Wednesday, you can see overnight it follows through. Europe, Japan follow through on the rally. U.S. stocks open higher. They make their highs of the day basically in the second hour, right? And then chop around the rest of the day as they've had a couple of days of pretty solid gains in there. Oil up 2% helps the gains. Financial stocks and energy stocks really move up during that period as oil, firm. Financial stocks looking at the potential for higher interest rates, changing the yield curve favorable to them. Bonds continue weak, and gold has its sixth day of drop right over there on Wednesday. So you can see gold, silver really struggling in there. Comes Thursday, well, they move sideways there pretty much overnight and during the day. Not a lot going on as they rest after a two-day jump. Bullard comes out and warns on inflation, cites a tightening labor market. Well, I mean, you have a 5% unemployment rate. That's fake. But there's that warning by Abe about the Lehman event and the U.S. stocks, they just rest. And they pretty much rest also on Friday overnight, not doing much, and then during the day, not a whole lot. There was a lot of waiting for Yellen to speak, who spoke at Harvard, and they were expecting that she would set up the rate increase. She actually did so. She said economy continues to improve and rate hikes are coming. She's cautious, though, not to increase too fast, and talks about the scope of their ability to cut if there's an issue out there is just simply not there, and talked about all of these experimental tools that she used. I think experimental is my word, not hers, as they have done everything they could to push down longer-term interest rates. They're going to be doing a lot more of that, if I'm right about bonds and the economy in the late portions of this year and in 2017. Dollar continues to be strong, and the precious metals just continue, and the euro continues to be just struggling here to get any footing at all. U.S. stocks, they try to edge upward, and you could see choppy in here as we do this recording. So there is just the rest period going on in here. When we get to the short-term view, I'm going to show you why I think that we're going to get a minor pullback in here, but it's likely that the stock market is going to move higher. Let's take a look at our earnings and economic calendar for the coming week. And you could see earnings, not a lot in here. One of the stocks that we love, and for those of you that get our rankings and setups, you can see that we had something in there, was Avago, AVGO. This is a stock that's going to report after Thursday. And then you have Coors Wednesday before the opening in the category of the retailers who have been so struggling up to this point. Big economic events for the week. Well, the predecessor to the Friday event is the ADP, that's the private employment numbers. And then on Friday at 8:30 Eastern Time, the numbers for the employment situation. Also, ISM can move the markets in there, but the employment numbers are the big numbers for this week. So that is the opening segment for this week. And stay tuned. We are bringing you the best and the worst for the week. For the best of the week, I gotta say, it was deals that really influenced things on the upside. Had some big movers in there. Gotta look at CSC. That's a computer sciences. That one is, well, gone. I mean, just absolutely huge move. The news in there was that they're going to be merging with a spin-off of HPE. That's the spin-off of Hewlett-Packard. So it's a spin-off of a spin-off that's going to be merging with CSC, and this stock gets, well, a giant move to the upside. Take a look at this pattern in here. It's just absolutely explosive as it moves this week from 35 all the way up to a high of 51. Patterns in here were suggestive of, well, stalling right around this area right here, but the deal absolutely changed that. You can see the beautiful cyclicality in here as it moves up and down through these rising and declining cycles as money moves in and out. But here you could see as it moves up, well, it never really turned over, and then it absolutely explodes there to the upside. CSC merging with a spin-off of HPE and gone. Take a look at SHLD, the next one we're going to look at. This one moves up 20% as they come out and announce they're going to sell some assets to gain liquidity. This is fantasy land. When you talk about this stock making any kind of a recovery, there's no way that they can win any of these battles here in retail. You can see how bad retail is for brick and mortar, at least most of it. Some of the teen retailers doing better, but overall retail just a nightmare. And you can see that what we're looking for was a rally in here. It fails at the 34. And that's the 34 week, and it looks to me like any rally you get in here is just a complete failure. I believe this stock is going into single digits sometime into late summer, so SHLD gaining 20% on a bunch of nonsense. Micron MU, this is a stock that I really loved. I thought that they were getting themselves really set up to capitalize on the mobile age that we've moved into, and they had really done a great job of it. But then you got this big top pattern over here. You could see that big megaphone, and the stock went into a very, very big decline. It gets all the way down below its 78.6% monthly, and now it looks to me like it's building a base. But that base isn't due to end till somewhere out over here in August. It's in this little rally phase over here. It probably could get to 13 around that 34-week moving average, but overall, I'm not excited about it right now. But it does look like it's building a big base, a gain of 19% on the week. We've got to look back at Hewlett-Packard. HPQ gains 13% on the week, and you can see it's in this green rising zone in here. Pretty good resistance right now at about 1360 on that Fibonacci retracement number. The green phases are rising phases in the cycles. You can see that well right here and here and here and here. Beautiful, huh? And then when it gets into the corrective phases, well, you get into these yellow phases, and when you get big breakdowns, they're red. So where are we now? Well, we're still in this rising phase, and no real sign of rolling over yet. A lot of hype now as their earnings did beat, and now with this spin-off of the other Hewlett-Packard, lots of good things going around the news waves, and that's getting a lot of buyers in here. That's going to have a hard time getting through that 1360 area, and even if it does, that 1460 area looks like big trouble. So I don't see any kind of a runaway here in Hewlett-Packard. Dollar Tree is the next one we're going to look at, DLTR, as this one is up by 15% on the week. They had a really big earnings beat. You can see in here the cyclicality on this as it moves to 89.42 for the week. That is an all-time high. This stock was listed in my riskiest of 2016, which overall my best and riskiest have done phenomenally well. This is one that really had not done nothing for the year until this week right over here. So pattern definitely has improved. Well, you got to say that when it goes to an all-time high. Here's your cyclicality right in here, and the first week on the upside in this new rising phase says that if it pulls back, well, you can expect it to move up again. So big move there in Dollar Tree on the upside, and as they raise their guidance. Stratasys SSYS, a very beaten up 3D printer. This is what a base looks like as the base is being built. Analysts have upgraded this stock. I think it's a little premature. There's another few weeks in here it could chop around, but after that the base is built and then moving up like that. I think this is a stock that you can accumulate in here as the big base in there as it moves from $130 all the way down to $14. That base, we believe, is being built and almost complete. So we call that a stock that looks investable to us. Netflix NFLX, the stock up 14%. This is really based on, there was some rumors that Apple was looking to tie up with Time Warner, and if they couldn't do that, they may go after Netflix, and it's a bunch of hooey, and we actually think this is not a great pattern in here. You can see our analysis, this big dotted red line points to a low over here in the July-August period. So we think in this resistance area that it is likely to roll over and probably get back down and test this 85 number before this is over with. So this, we believe, is a false rally in here, and it came at the appropriate time. You can see right here where the bottom was due, right there, and there's the rally right off the perfect timing. So, but into resistance, and we do think Netflix is likely to fail from somewhere around this area. 107 is kind of the big number. It's trading right now 102.30. Western Digital up 13%. Analyst upgraded that. We still think that one is in a negative pattern. Neighbor NBR up about 12%. It looks like it's bottoming to us. Maybe has a little more work because the rest of the group in the drillers, that's oil drillers, they look like they have about a month's time to go before they end up bottoming, and we're looking for oil to roll over and move down into the June-July period, so that's pretty much in line. So NBR looks like it's bottoming on that pattern, but 12% gain, nice, but we think it's kind of stalled right over here waiting for the rest of the group. SunPower, SPWR, in the solar category, that gains about 12%. We actually have loved Canadian Solar, and that was the one that we thought was the best buy, though SunPower is looking like it's putting on a good bottom. Let's look at those two stocks quickly in here, as you can see why we believe that there is a bottoming going on in these two stocks. We were looking for the decline to come, well, right about into this time period in May, and then you get this engulfing pattern right over here, and we believe an upturn is occurring in SunPower. Though CSIQ is the one that was our favorite and we thought the best value, you can see a similar timing in here where there was a decline due into this period right over here. We actually have been very patient on this one, saying we're going to wait until this May period for this to finish and then turn up right over here, and you could see that has been almost perfect in here, and now we believe we're in a rising pattern, and we would love to be able now to add to longs in here if you get a dip. So we'll call the support right around 1680 to about 1730. Hopefully you get that kind of a little bit of a dip in there, but everything about this looks bullish. SunPower and CSIQ gaining 12% and 11%. We think those are the best of the group, and that is the best of the week. For the worst of the week, well, there's not all that much to talk about. It was, of course, a strong week in the markets. One earnings report that beat up a stock, and that was Abercrombie, ANF, as that stock, well, gets dumped for over 13, make that 14% on the week to the downside. So really a rough week for this stock. Some of the other teen retailers looking actually better, but this one horrible, and falling into a little bit late for us, but into this timing of the low that we expected. So this big drop in here coming at a point where we think it's getting near an end of that decline, and overall long term it's not a good looking pattern. You can see our projection in here is that it does get a bounce up into this maybe $25 area sometime in the next coming couple of months, but then after that rolling over again. So when you look at the daily chart, I'm going to put this one up for you to see in here, you can see this is what an exhaustion gap tends to look like, where it gets really sold out by massive volume. We believe that's what's going on right now, being that the timing is right for an intermediate low to be formed. No sign of it yet. We're going to be looking for that in here and then getting a bounce back up into the slim ribbon. Note the slim ribbon was bullish right over here, neutralized right over here, turned negative momentum here, and that negative momentum carrying all the way down right through here. Projection oscillator getting very, very oversold, so you could expect some kind of a bounce when that happens. And this one is likely, though, to struggle in there, as you can see this week. Back to the weekly chart. Really cool, isn't it, that it made this big inverted head and shoulders right over here, bottomed, projected to right over here as the measurement for the advance, gets just above that and then rolls over into this big decline. But as we say, we believe that that decline is over for Abercrombie. We're going to take a look here at some of the precious metal stocks, because those are the only ones really to talk about on the downside. And if you catch our Future Speak, which is on Wednesday, we did talk about this group also, as we believe that the timing was right for decline in them and then for a bottoming and getting ready to move back to the upside. So I want to just talk about a few of those, as there is a low due. We're going to take a look at AG, which is a silver stock, and you get an idea of the way our patterns are working and what we were expecting in here, as this stock had moved up from from $2.50 all the way up to $12. How do you like that? Talk about they're pricing in amazing leverage in these stocks as the price of silver went up, and now we were looking for a decline into this period, and you could see that right here as we had the projection in here, and we believe a low is coming in the next week or so, and then the stock is going to move back up to the upside. But this loses 9% for the week. ABX loses 8%, Rand Gold loses 6%, Heckle loses 5%. Let's take a look at Newmont NEM. And you can see in here that this is a similar look to what we're talking about. As it popped up, we were, trying to short it up here. It was giving us a real hard time. Gets down to this intermediate price right there of support, and we think again another week or so in this declining or corrective period, that you could call it right in here. You can see the declining period in here and the declining period in here, and how do you like all that? And then when you get into the rising periods right in here, look what happens, and we got one of those coming. So we believe that gold is going to stabilize around where it is right now, and we're going to get a bounce in here, and believing that GDX is in a much better pattern than the precious metals. And you can see in here there's the GDX on this one in my category of my best for the year, and you can see in here that it has literally exploded, almost a double. So this one coming right down into that support area, right into this timing of decline and then rally. This gives us a sense that we believe that the whole group of miners, of gold miners and silver miners, are going to do better. We think gold bounces, and I'll show you that in the short-term view, and that this whole group is was likely to be one of the better groups here in the next coming weeks anyway. So that is the worst of the week, with maybe some of the best opportunity. And we'll be right back with our short-term view. All right, before we get into our short-term view, just a little reminder here that we have 4 levels of membership. Level 1 being, well, you get to watch this show and the archives. Level 2 being all of our videos, 7 different categories of videos, amazing library we've built right now. Level 3 is our rankings and setups, where we look at the 71 best traded symbols, give you 3 different time frames of rankings, and our setups during the week. We try to put 1 or more up a day. Sometimes we don't have that many, but we do what best we can to give you a high probability of positive entries. Level 4 is our charts. You get all of our charts that you see here. We do work on some 400 symbols and do really a ton of work on those 71 symbols of the best traded futures, ETFs, and stocks. So amazing stuff that we put out here every single week. That's RV and I do a ton of research. So go to askSlim.com and look at membership and become a member. All right, so let's take a look at our short-term view of the coming week. We always do this. Look only at daily charts. We're really taking a look at the next, let's say, 4 to 7 days, and then take some accountability of what we said in the previous week. Well, we didn't do this last week. We did it 2 weeks ago. And if we look at what we said 2 weeks ago, we're going to only give ourselves about 45 or 50% for that time period. Really subpar for us. As the dollar strength, I think, set us off. It was a little stronger than we expected, which had the euro weaker, which had gold weaker, and those are kind of where we missed in here. The stock market, well, we don't get much credit for that. We thought the stock market was going to go down to about 2,000 on the S&P 500. It fell the week that we said it would, but then it bottomed early, and it actually, we thought that this week, which was a strong week, was going to be another down week. So we don't really get any credit for that, that's for sure. So overall, we're going to give ourselves only 45 or 50%. As we got light crude right, we got the bonds really right, and we got the euro kind of half right as it fell to our target, but then a little bit lower than even our target, and has not turned up yet at the point we expected it to. So let's take a look here at our view for the coming week. Start out, as we always do, with light crude, and here is that daily chart in light crude. So now we're entering into a period on the intermediate chart that we think is rolling over. And there's some resistance up here. You could see it around 50.5 to 52 right over there. That looks like the spots. That is a pretty tough spot for oil. And this looks to us like it's rolling over. So what we're looking for in the short-term pattern, you can see these cycles pushing down in here. We're looking for a down week in the coming week. We think it's going to hit support somewhere around 47.70 down to about 47.05. That's a minor support zone. It's the bottom of the slim ribbon. You can see where it gets to the bottom of the slim ribbon here and here. So we don't think that this decline is going to be going to go below that, because it's really rallied most of this cycle. So we're kind of looking for this pattern right in here that you can see. And that's bouncing off of this area between 47.05 and 47.70, and then rolling over again after that. So what we really see is a rolling over on the intermediate pattern and a rolling over here in the short-term pattern right in here, probably trading for a while in that zone right there, 47 to 50, and then once this top is made, rolling over for a bigger decline and a full-fledged correction. But for the next week, we're only talking about a minor dip, and then after that an attempted rally. So we're going to call it a small down week for the oil market. Next one we're going to look at is the gold market /GC. So let's take a look in here, and we have this set to 2 years, so we have to bring it in so we get the proper alignments. Earlier in the show we talked about the GDX pattern and that we thought it was going to be bottoming and then rallying. That's the red dotted line that you see right in here, and all these nested lows for gold and GDX. And that's really why we thought that we were going to get a decline in here. We talked about gold going down when we left and continuing down, but it got much lower. We thought, just under 1250 would be what held it. It gets all the way down to 1209 in here, so it got lower than we expected. That changes the scenario. The fact that it got back down to this low over here, that is not a good pattern, and we'll talk about that in a big picture analysis on gold moving forward. But now our projections for the upside have changed. We talked 2 weeks ago about a decline and then a surge. Well, now we're looking for a rally, but the word surge is now out of our vocabulary, at least for the time being, as being that we've gotten down to this level, which is a support. It says that the next rally is going to fall short. And that tells us that, well, we get somewhere up over here, rally up to, let's just call it 1234 as our first target. You can see that 89-day moving average. And then after that, about 1249, 1250 up here. But that's all we're looking for now in this rally. We think it's going to be enough to get the gold and silver stocks moving pretty nicely. But the picture has changed, and we have to give credence to that 1300 tick that we had up there is going to be it for quite a while. And so we're just going to look for a rally in this period, as there are this bigger pattern going up, the smaller pattern going up, the GDX pattern going up, and we believe that we're going to get that bounce in here. We're going to call it an up week, and even a few upward choppy weeks in here, but just for the next week is all we're going to concern ourselves with, and that is an up week that we're expecting in the gold market. That coincides with what we see as a small down week coming in the dollar market also. That should also help the euro currency /6E as the gold market and the euro market move counter to the dollar. This is a changing pattern in here. We were looking, this dotted line originally went to this minor resistance, but because it broke this low, it changes that, and now it only gets back up over here somewhere. So we're looking for a small change, attempted rally in the euro, but not a lot of upside potential in there, and that rallies will then fail. And we're actually looking for that for this whole period you can see out over here. That's this cycle right there. So we see that the euro currency has more time to struggle. And yeah, that aligns with the fact that we don't think gold is going to have a wonderful time of it yet here either. We're going to call a small change with rally attempts here on the week in the euro currency. So the bond market / ZN. 2 weeks ago when we left, we talked about the fact that there was risk of a sizable decline. And that has started. This is the ZN that we're looking at right here. So this is where it declined in the week that we left. Beautiful. And now in this rally period right here, which is a bouncing period, that's this dotted line you see right there, it's going nowhere. All you get is this sideways chop. This is a bearish rectangle being formed in here. And we believe that, well, I'm going to show you in a minute why I think the stock market might fall for a couple days, but that you might get a little more of a bounce in here. But there is a ton of risk in here. So we think it's going to be a big down week for the bond market. As a matter of fact, I'm not going to put up the ZBs, but I'll target those and say, our target for the next couple weeks is 160.25 down to 158.20 in the ZBs. So that's quite a ways down. You can see the intermediate support here at about 127.18 on the 50% here on the ZN. So we think there is a ton of risk here in these next few weeks, and maybe setting up for one of the better trades. To get a little bounce in here, I think it's a great setup. We've already done some things on our setups in the bond market as of today. So bond market, we're going to call that one as a down week. So now we're going to talk about the S&P 500. So the last 2 weeks, our tone, the tone of the market has changed, and so has ours. We thought there was going to be a decline that would last another few weeks. It would get to 2,000, and then the market would rally again. Well, now 2,000 is gone. It got down to 2025, and then had a very sharp bounce to the upside, as we showed you on our 60-minute chart of the ES. So the tone has changed, and we have flip-flopped, saying that it's likely that we're going to move to a test those highs that we made at 2134, and maybe even somewhat beyond there, and then we think there's trouble after that. But in the meantime, we're only looking at a short-term view here in the S&P 500. So what we want to do now is look at what happened in here, and now at what we're projecting, and take a look here at this short-term view. So what we had anticipated was that it would break, that if it broke underneath this key cycle support level that we have listed right there, that it was going to be in some trouble, and then declining out through this period to get down to the support right around over here. The 89-day moving average at around 209, this at around 2,000 or a little lower. That's what we thought. And it gave you this fake break, this hammer right over here, and it never closed below that level. It looked like the Head and Shoulders top had been formed, which would then measure down into these levels over here, but it didn't complete it. And then it moved up through the resistances and changed this whole pattern. So here's this old high way up over here. No, that's not quite the old high. That's the intermediate high. And the old high is up around the 2134 level. And so what the pattern now looks like in here is that this period right in here, which called for a decline, and which we thought was going to get down over here, it now calls for just to come just a little bit down here. We're going to call it maybe 2-3 days on the downside potentially in here for a minor dip, and then moving up again sharply past this 2113 level and most likely to the 2134 level. So you can see the strength in here. I mean, the market is just not giving any ground whatsoever. Take a little closer look at that in here, just so that we could see these levels. So this 23.6%, that is 2080. That's really the target that we have for the coming week. That's only 15 points to the downside in here. If it accelerates a little more to minor support, it's 2070. So those are the two numbers, 2080, 2070, sometime in the next few days. and then up again, and we believe it could be sharply, and some kind of a buying panic in here, as all of these investors believe that, well, the Fed is signaling that the markets are stronger, the economies are stronger, and we get this big move up. And the shorts that really were expecting the market to break on here, everybody was talking about this head and shoulders pattern. Then they really start to scramble. We can see that in some of these categories like energy and especially the financial stocks, the home builder stocks, there's quite a number of categories, industrials, that just look like they have a lot of room on the upside. On Tuesday, we're going to put out a video for our members with our favorite stocks for this period that we think is going to be strong over this next, maybe it's a month. Then after that, anything could happen. But if we're right about this strong month coming here, then you're going to want to know which stocks have the best chance to move up and the least chance to move down. And we're going to give you a list of those stocks coming up this Tuesday. So it'll be our best for this coming short-term period, and there's a number of them in there in those categories that we've been looking at here. So pattern definitely improved. We gonna just say we didn't do great over this last couple of weeks, and we expect to do better. Always expect to do better, and our target is really about 65-35 when we look at these short-term views, and mostly we get there or better. So that is it for our short-term view of the week. Also it for our show. We hope there's been great information in here for you, and let us know. Send your emails, any questions you have about our services, send those to slim@askSlim.com, and I will hope that you have a great trading week coming, and always wishing you great trading.
Well, I'm going to the city.